Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. It is a beautiful morning here in Denver, Colorado. Today, I am pleased to be joined by my friend, my buddy, my compatriot as we get together on these external events here, Mr. Scott Durfee. Good morning, Durf. How you doing, buddy?
Good to be with you, Kevin Horner. Holy cow, it's been a minute.
It has, yeah. You have lucked out by getting to co-host these shows of late with my counterparts instead of me. But I am very, very pleased to be here on a Monday. Glad to have you joining us. We got plenty to cover. Of course, it's a busy weekend, but I hope your holiday weekend was a good one.
Yep, sure was, and I'm assuming yours was as well. You and your sweetheart. You know, Kevin, on frequent occasion has the opportunity to come out with Ray and I and the live workshop team to present in your city. So watch for him there as well.
Yes, indeed. Thank you for always positioning the in-person events as we do. Don't forget to check the calendar, everybody, because we are coming to a place near you. Remember, we are pushing out already, looking at March events, and we'll have April and thereafter events posted on the site. So schwab.com/live events for all of you there. Today, we are joined by Brent Moores there in the chat. You can say hey to Brent. He'll get the comments and questions that Scott and I are unable to get to, but we're going to watch the chat nonetheless. We want to hear from you. Please feel free posting in there for the duration of the show. Don't forget to follow Brent and me on X, Brent Moores CS and Kevin Horner CS, the best way to catch up with us coaches when we're not hosting classes for you here. Let's get to our disclosures and we'll dive right into things this morning for you all. Remember, our conversation is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a specific approach to trading the market here. We will use technical analysis, discussing it and providing some concepts and strategies that traders might choose to employ in their own trading process. Remember, though, that trading in the market, this is really a big puzzle piece. The process by which many traders go about it is to incorporate as many informational pieces as possible to make their decisions. We specifically discourage you from using only technical analysis to base those decisions. Now, beyond that, we'll remind you of our traditional agenda, which is really a top-down review of the broader market here, everybody. So we'll start off with our biggest indices. We'll hit the S&P 500, the NASDAQ 100, the Russell 2000, the semiconductors, and then we're going to see what's moving today in terms of sectors, get to some stocks in the news. We do have a headline this morning regarding NVIDIA and Synopsys, so we're going to look at charts there as well. So with that, we'll jump right to it. Durf, the thing that I was thinking about this morning right off the jump was how great things looked on Friday, and I'm reminded that market that has a lighter bit of volume can move a little exponentially on lighter volume. It can be easier to push markets directionally. And we had a great finish on Friday, but boy, it seems like the data we continue to wait on is just kind of overhanging us here, kind of like a black cloud waiting for information, and we just don't have enough directionality from that data just yet.
Yeah, you're 100% accurate. And I think that's what we're seeing here. You know, and we could probably anticipate more of this as we go through this week. This week's pretty rich, Kev, in terms of, data, especially Friday. We get PCE Friday. And I think the markets are waiting a little bit on that before we get definitive in our volume, especially. But also, we've got some decisions that are coming out by the Fed that traders and investors are also waiting on. So, to your point, there's just a lot of stuff out there that we're really trying to pay attention to. Should we be defensive? Should we be aggressive? I mean, are we overbought? Are we oversold? And everything like that.
Well, it's a hard balancing act, right? We traders, we try to balance price action with narrative and story and what do we believe. Ultimately, if you're a trend trader, you might just lean into the levels that we've continued to create along the way. Scott, one thing that is certain about the way that the market looks here, if we go back to those April lows, even though the lows of last week did not or came down to an important level here in the SPX, that 65.40 zone. They didn't make a lower low. So ultimately, if I'm a trend trader, can I just continue to lean in to the idea that we do not as of yet have lower lows, even though we have lower highs, but we don't have lower lows just yet, regardless of really our time frame. Can we lean into that and be a little optimistic, or do we use that as a reason to be maybe a little bit more defensive in nature?
Yeah, both.
Okay, real clear answer there, Durf.
I love to give clear answers. And the reason I say both, actually, Kevin, and think this through. When we talk about trading in the market, we don't just talk about trading in one time frame. So for long-term traders, the posture is definitely still bullish. For kind of medium-term traders, you can also see that we're still in definitely an upward trend. When you get to the short-term short time traders to shorter time frames, you're right. We're seeing lower lows. We are holding that base there for the support somewhat. So we're working our way into a bit of what we call a squeeze for the short term time traders.
Sure.
So we need to be aware of that. But I think the answer that you're looking for is overall, we're definitely in still a bullish posture in terms of our trend.
And I think one of the reminders about that, Scott, is that if nothing else, and it's one of the things I say frequently, is that we remind ourselves, technical analysis doesn't tell us what's going to happen. It's not predictive in nature. What we do know about it, though, is it can help us understand where we can start to change our viewpoints about the possibilities, or rather the certainty, the lack of certainties.
Yeah.
The market's going to do anything, right? So that green line, I just recolored our support at that 65.40 area. Under 65.40, if we closed below that, I imagine that's a decision point for many bullish traders and probably some bearish traders of the SPX as well.
There's no question, bullish traders, so people who are waiting to buy this are typically waiting to buy where others have sold historically. And yeah, it's not a crystal ball, but what it does tell us is you go back, you can see going back to the beginning of September, 1, 2, 3, 4, or 5 times, buyers have come in and started buying at that point, and that's what makes it come up. So, when we see these levels of support and resistance, that's what we're really looking for, are areas of supply and demand, Kev.
Yep. That's a great reminder. I know it's easy to get misplaced, but ultimately that's all it is, right? It's supply and demand of interested buyers, interested sellers. And then I'll just throw the reminder that we can't be misled by intraday price action if we're daily chart watchers. We really got to lean into the closing values, don't we? Because if you take a look at how things looked on that 11:20 followed by the 11:21 day, it was very unclear how things were going to manage thereafter. But the fact is, we closed above our open on the 21st. We had a nice solid day. We did trade lower intraday, but Scott, ultimately we held that. And it was the fact that we held it that gave bulls reason to believe that it could stay as a support level.
Right. And that strong belief that Kev didn't actually come till the third day, when we broke that. But when we broke that little tiny level of resistance, even those little tiny levels of resistance and support can bear sway on our decisions, right?
Yeah, they really can. It's a great reminder as to why we have to at least be thoughtful of the levels where we want to take action. Try as hard as we can not to be sellers at support. Not to be buyers at resistance. Reason being, if we're sellers at support, well, it's because we're fearful and we're thinking that the market's ready to break down, so we sell. And chances are, as a reminder, if we're talking trading, hey, buying at support, you continue to buy at support until it no longer works. Try not to be ahead of the game, so to speak, right? Let prices dictate that. I've thrown up the NDX now, Scott, and we see that we had a question on Friday or last week, Thursday maybe, about were we setting up the potential for a head and shoulder top? Anytime you draw the lines in, Scott, it always makes it a little more clear, doesn't it? It kind of looks like it could be like that. But when you're paying attention to the NDX and NASDAQ 100, what other things are you watching here?
I'm mostly just watching what's happening with the stocks that are in the NDX. I mean, when we start AI, we could spend an entire day, not just
Sure.
session, day, talking about the ramifications. Is it in a bubble? Is it not in a bubble? I mean, and all of that. Is it overvalued? Is it okay that we're seeing higher values than we've seen before in these stocks? So there's still a lot of rhetoric. There's still a lot of debate, I think, among investors and traders when it comes to the stocks in the NASDAQ, all the tech stuff. But still holding strong. I mean,
Mhm.
yeah, head and shoulders, but not really behaving like a head and shoulders today now, is it? So we'll see how it goes.
Yeah, and we're day 3. Some would say day 4 if we
Yeah,
incorporate the 25th above the 50-day moving average. So, as a reminder of what some traders look for in terms of confirmation, they want to see 2 days in a row, 3 consecutive closes, 4, etc. They've got a definition that says this validates a move through the 50-day moving average as supportive, for example. And we're in that window, Scott. So
yeah,
if,
yeah.
for example, we held on to the 50-day at today's close, would that be something that would give bulls at least some additional confidence in here?
Yeah, it definitely is. And Kev, to that point, go to the left shoulder on your head and shoulders
Sure.
drawing there and extend that to the right.
Okay.
Just extend it to the right, and look what happens.
Oh, we're
So
sitting right on it.
I mean, another potentially confirming phenomenon taking place. Not only are we seeing some moves to the upside, not only are we breaking the 50, not only are we breaking the 200, but we also have a break today and even last Friday, a break in that level of resistance. If we close there, that'd be even further. So yeah,
And the truth is, Scott, even if we pull back, hang
yeah,
on, test the
yep,
50-day, that's going to be a short-term higher low, right?
yeah,
And
yeah.
possibly position us for that next opportunity. But, again, we could just as easily be thrown back into this range that we were through for the last couple of days on this optimism around Black Friday and the incredible amount of online selling we had done on Friday. I think nearly $12 billion in online
Correct.
investment or online purchases on Black Friday, which is 9% above last year, by the way. So I think that's kind of crazy. We continue to spend. Not really crazy considering who we are as a country. I mean, we are consumers by and large. So we'll
Yeah.
keep an eye on
Hey,
the
Kev,
Nasdaq here. That 2050 confluence pretty important to me. Go ahead, Scott.
before you go away from this chart, can you
Yeah,
zoom out? How
yeah. You
far
want a
can you zoom?
weekly?
Yeah, no, just give me a 1 day, 1 year is fine.
There you go.
What are we
There's
on? Yeah,
there's 1 year.
1 day. Yeah, so you were talking about how this particular index, rather, I was going to say stock. This particular index has found areas of consolidation, and if you look, not only are we seeing an area of consolidation right now that's started to begin right at about the 1st of September, but we saw it in July, from July to September. Then we just broke
Hmm.
into a higher channel. And even prior to that, going back into May, we were in a bit of a channel. And then in July, we just broke into a higher channel. And so,
Hmm.
to your point, we are definitely etching our way, continuing to etch our way into bullish territory with the NDX.
And you know what else, Scott? As even though we see these moves, you see this looks like a breakdown, a very big, ugly candle, like I said on November 20, and yet even though we opened and traded lower through it, we
Yeah.
held the level. We moved off of that level. And if you're looking at it on the daily chart and you're parsing every single intra-period move, you're going to be getting some false signals. It's true. If we backed it out to the weekly, though, boy, I tell you what, maybe just looking at exclusively the 20-week moving average here, and now it's in orange, previously in green. But boy, Scott, you could just lean into something like this if you're a longer range trader, longer range investor who's not trying to make decisions on a day to day, week to week basis. You'd have a lot of reason not to have done anything since early May.
That is a fantastic point. And another reason why, Kevin, I love it. And Kevin's really great at this. Kevin's actually helped me kind of hone this in. But Kevin takes a lot of looks at the weekly chart for that reason, to get a more of a macro, more of a top-down analysis of the technical analysis. So thanks for pointing that out, Kev.
Of course, it's such a balancing act. We're never going to feel 100% confident. In fact, if you do, maybe that's the reason. For me, that's my red flag, Scott. The moment I'm feeling 100% confident is my red flag. That's when I need to start pulling positions off the table, building cash, because I generally start to believe my own press clippings, and I know better than that. What I'm noticing here, Scott, a couple of things here. We're going to talk about the small caps. We're also going to look at rates because it's absolutely impacting small caps here today. But the big move here was the snapback and the aggression in the snapback. And Scott, as we dovetail this conversation on the small caps and the rut into yields, it's basically all tied to the conversation we got out of Fed governors last week, where they started saying things like, yeah, I really would have preferred to have seen a cut coming, and I think we're going to get a cut. So there's been a lot of conversation, and that conversation has led to more optimism on rate cuts.
Yeah, there's definitely a lot of hopeful optimism built into the Russell. I mean, the Russell being our small cap indice. You know, we're just looking for these companies as soon as interest rates become more and more alluring to them to use, then obviously we're going to see potentially we're going to see the Russell continue to grow. It's just kind of been being held back and just laying in wait for the last year, maybe more. But again, Kevin, to your point, I was going to say 100% dependent. It's not 100% dependent on it, but it's very dependent on what's going to be happening when it comes to time for the Fed to make their decision.
Yeah, it's clearly one of these things where if we were to put charts side by side with the Russell on one side and yields on the other, the big moves in both are inverted to each other, right? I mean, it's pretty clear to see. The most recent move here, let's take a look at yields on this. The bounce in yields today into our downtrend line. So pressuring small caps, pressuring some other sectors of the market probably. But for a lot of traders, Scott, the thing that I've been talking about is that downtrend line off the peak in May. Essentially, we've not broken that. And the fact that we've not broken that yet, even though you get intermittent pops here and there, kind of speaks to the idea that rates are, or yields are, continuing lower. And until we get, I mean, I still kind of target, even though the downtrend line is right here, I think the level that matters most might very well just be in here, right? 4.1 to 4.2 on the yield itself. If we get through there, I think things change pretty aggressively in terms of how the market reacts. But what are your thoughts about yields and Russell and the relationship there?
Yeah, pretty much right in line with what you're saying there. You notice that inverse relationship. They're there for a reason. Those stocks that are in the Russell are very dependent on the value of credit. And if they can get that credit for cheaper, which is what we're talking about here, that's what the rate is. We're looking at basically the 10-year here. The 10-year is tied to so many things. When I was in the mortgage business 30 years ago, that's what we watched was the 10-year because everything was so tied to that in terms of home mortgages and things like that. And so, the stock market is a part of an economy. Right? It's not the economy, it's part of an economy. And so the yields have so much to do with other things in the economy besides the stock market. And what we're seeing here is a reflection of what's taking place. So keep that in mind as you consider the 10-year or any of the yields and the relationship that they have to the stocks that are in these indices.
Now, Scott, I want to make sure that we bring in some questions from our chat here because our viewers are many. They come frequently for me here to the segment. I always appreciate hearing from them. There was a question in the chat about lower lows. What defines it, or maybe how much lower can either the SPX, the NDX, how much lower can they go without making lower lows? I hope we've kind of answered that. But I do want to address it here as it relates to the Russell, because the Russell did give us a pretty healthy low compared to the peak we've made, right? I mean, if we just drew a line down from the peak to the trough we just hit last week, this pullback was 9.5% in the small caps. And clearly that is lower than the ledge we'd held as support in here. So a lot of traders, this is a lower low in the Russell. And yet, Scott, we got a very quick healthy snapback. And I just want to remind traders about that, Scott, because even though this made a lower low, the bounce back wasn't likely tied to the level off of which we hit, but more specifically, everything we just got done talking about with yields.
100%, but it can have something to do with the level to a degree, right? So draw a line under that bottom low that we've had most recently, where you have those two, and then extend a line to the left, all the way to the left. Yeah,
Scott, I can't believe I missed that out. Unbelievable.
Yeah.
Go ahead.
Yeah,
Great call.
well, I mean, to this group, it's kind of self-explanatory, right? I mean, that's a level of old resistance that has now become new support. And we have to remember that sometimes old resistance, as a matter of fact, we can, if we're following the if then that then this statement, we can say that, when we break support or when we break resistance, we expect that level to now become support. And that's playing out. Look, it's playing out several months later, and you'll see this most often in indices where it's where it has sway, where it has value in understanding this. But we're getting a bounce off of old resistance, support. So it doesn't worry me at all that it came down 10%, because it came down to a level where buyers are going to potentially step in, and they did.
They sure did. That's a great reminder. I'm so glad you called that out, because as another bit of basic technical approach to trading, Scott, we can just lean into the tenets that are the building blocks of technical analysis. Higher highs, higher lows, matching lows cool, lower lows less cool in our time frame, but old resistance becoming new support. Those type of things can carry you week to week and help you validate levels and maybe give confidence to expose a little bit of money here and there when you feel the need to. It would have been really hard to do so over these first initial hours trading down at these levels on the 21st and the 20th, Scott. And yet it would have been the right play. But, again, that leans into a little further away from technical analysis and more into trade management and how do I dabble at areas of support in a comfortable manner for me as a trader. All of that is part and parcel of being a trader, though, isn't it? Just knowing how much dollars are important, are comfortable for you.
Yeah, definitely. One of the, as a matter of fact, not to sideways us, but that's the thing that we teach in every class is portfolio management and making sure we're not over trading, putting too much in or not enough in, or not enough in sometimes can be a problem too, right? So
it's true. It's easy to do. I'll tell you what, in the midst of the rally, April to September, it was really easy to overtrade on the bullish side because there were so many favorable setups and the rallies were grinding to the upside and every pullback of 0.5% was bought up. It's been a little different of late, which is to be expected, and it helps me to be reminded of that because the market doesn't work as I often say, in our window of time. It works in its own window of time. So, try to keep those things in balance as we talk about all of this. Now, a couple other things. First of all, I got to mention we got a survey in the chat. Brent has been kind enough to pin that to the top of the chat, everybody. If you'd be kind enough to just simply click that link, it'll open in a browser window right next to this one, and you can take 60 seconds to give a score and leave any comments. If you do leave comments, those come directly to Scott and me, and we would love to hear those. We value that feedback 100%. Totally try to bring your suggestions, ideas, etc., into subsequent conversations we have here on the channel. So very valuable to us, if you don't mind. Now, Scott, additional groups we want to touch on as it relates to yield before we move off. Clearly, there are some other groups we got to note. I'm noting today there's a good pullback here in utilities as yields have popped, and a good pullback in real estate as yields have popped. So these are the two that I've been watching. Is there anything else you'd like to share as it relates to these two interest rate sensitive groups?
Well, maybe not so much, maybe a little bit interest rate sensitive, but let's look at healthcare too.
Sure. Man, just keeps doing the same thing, doesn't it?
Yeah, healthcare can sometimes be considered one of those defensive sectors, right, Kev? And so when we see this kind of action, and for those of you who are technical analysis savvy, you're seeing a whole bunch of bull flags there that are happening and working quite well. So this is again just one of those defensive sectors that we kind of expect to do these kinds of things. Now, the other thing is, Kevin, we've gone through open enrollment. sentiment and all those other things. So this is kind of those kinds of things are also playing into this as much maybe as anything else. So keep that in mind as well.
Yeah, and don't forget to dive into your deeper areas of the market. Remember, when we talk top down, you've got your indices, which are your biggest cohorts. You break those down into sectors. Those are the 11 groups of the U.S. market, 11 cohorts. You break those 11 out individually into industries and industry groups, sub-industry groups, et cetera. You're going to have additional leadership. So here in healthcare, as a broad sector, it's doing fine. But you can also see that biotech has done well here as well. You've got biotech moving to the upside quite nicely in that space, and also the pharmaceutical and biotech collectively doing something similar. So again, when we talk about the broad approach to the market, you can drill into the leadership, and it's like as we say in the live show, Scott, fishing in a well-stocked pond, right?
Yeah.
Looking for opportunities that way.
A rising tide lifts all boats, in theory.
There you go. I like that as well. Okay, let's hit up our semiconductors, and then I want to make sure we get to some other questions or requests in the chat here. Semis have been in a bit of a rally back. Now, we broke this, in the midst of this deep pullback, and this was a pretty deep one, by the way. I want to draw the line on this just so that we can pinpoint it here. The high was 73.92, so I'm just going to peg that to the low here. And gang, look at this, 16.75% pullback in the SOX, broke the 50. But basically, you could call that a very standardized pullback after an incredible rally, couldn't you?
Yeah. Well, and look at your levels of support and resistance. Again, you've got them drawn in there. And, I hate to belabor that, but it's almost worth belaboring. I mean, that's where everything happens, right? So
it's true. Now, you're day two above what some traders would have called resistance there, right? So here we are. We're back above the 20. All right. And now you're holding horizontal support as well. So I'm going to color that white line green once more just to kind of remind myself of what I'm getting from it. But Scott, that doesn't look bearish to me all of a sudden. I mean, holding the 20-day, holding the 50 for now 3 days. If it closes like this today, that's got the makeup of a bullish continuation in a longer term pattern, does it not?
Yeah, actually it does. As a matter of fact, you could have actually made that argument Friday, because even that break and that close for some traders. Now, I'm not saying that this is the way it should be. As you mentioned earlier, some traders will trade immediately. Some will take a confirmation day and a second or a third confirmation day, and that's fine. And you should continue to do that way. But some traders would have looked at this and said, "We just broke resistance. This is the semiconductor group. We're still got plenty." And this is what some traders would say. This is not my commentary. Some traders would say we still got plenty of room to run. We've still got a lot happening out there, a lot of potential pent up future demand, not just present demand, and would have taken that Friday trade potentially as well. So we've got some really great setups there. You come down and you bounce off of that level of support, and then you've got that hammer looking. It's a little spinach topish, but a hammer looking. Then it closed above the high of the low day that came right as we broke resistance 3 days later. Technically speaking, it's set up for a bullish position. However, there's a lot that you have to take into consideration. You can't, as Kevin said, you'd never just trade off the technicals on this.
Yeah, it's one of those reasons, again, that, some traders have a personal preference as to how they go about it, right? That first bounce may not be a comfortable spot to deploy new money. But on the close above it, maybe that's the day you feel a little more confident. And so some traders get started. Maybe it's 10% of their initial trade value or the dollars they want, or 25%. They base their entrance dollar amount on the comfort that they're feeling about the trend. And as you get more confident, more comfortable, they deploy more money. That doesn't always make sense to every trader out there, because as you buy more at higher prices, you're raising your cost basis. But if you're a momentum-based trader, you're much less concerned about cost basis and much more concerned about, am I riding the momentum for as long as I possibly can? And so, as usual, know who you are as a trader. Are you, what are you trading for? What is the purpose? Have a plan. Try to adhere to that plan as best you can.
Yeah.
Okay, so
Real,
go ahead,
real
Scott. I know
quick,
you got more
you,
nuggets of insight. Go ahead.
yeah, you mentioned you may get on that second or third day. Really, technically speaking, too, you've got to hold on that third day after the bounce, right? And so the day
Yep.
that breaks that level of resistance, that's a hold. So you not only have a break of resistance, but you have a close above the high of the low day, another potential bullish indicator.
Yep. And don't forget, everybody, if your time frame is not daily but rather weekly, and you're looking for same thing like a hold move on the daily chart, you can take the same viewpoint on your weekly here. And notice the low week in our pullback was the week of November 17. And then last week we closed above the high of the low week. This big red candle would be the low week. And the fact is, we closed above that high on Friday of last week for this week, or last week rather, and that could be the continuation. So a lot of traders will look at that break and say that's the same on a long-term view as a hold on the daily view, and it can give more confidence and belief there. So again, everything we do on that daily chart can be applied to your hourly, your 5-minute, your 15-minute bar, your weekly, your monthly. All of the concepts and tenets of technical analysis can be applied regardless of your time frame. Okay, Scott, a couple other things we need to get to. We had some requests, so I want to make sure we touch on them. Let's look at precious metals. We're going to use the future symbols here, everybody, but we're not going to discuss the trading of futures in any way. So we're just looking at this from the technical analysis standpoint. I'm going to drop in here gold. Whoops, let me do that properly. So here's your gold futures chart. Scott, this looks like an uptrend working against that 50-day moving average, doesn't it, in purple?
Yeah, it definitely is, and I love how it's maintaining its. Is the red line? Is that the 200? I love how it's bouncing off and using that 200, as support in some areas. So yeah, we're gold's looking pretty bullish still.
Yeah, I'd be hard pressed to deny that. In fact, I could. Oops, I should redo this. I got the wrong line in here. This is the one I want. Broke the downtrend line. If this, you could have been looking at this as just a standard triangle or pennant formation against the 50-day. So what I've got in here, the 20-day in orange, the 50-day in purple, the 200 well beneath us here, way down there at about 3,500 an ounce. That seems forever ago. That's like 20% away. This move in gold is crazy. And the truth is, Scott, it actually looks similar in silver, doesn't it? Look at this.
Yeah.
Oh,
yeah.
I was wrong. We broke it.
Except for that big blast. Yeah.
Wow, what a move to the upside you got here last week, Thursday, Friday, and then continuation today. Silver really, really moving. So that's an intriguing look at things. A reminder maybe that there's still a little bit of overall broad economic fear, Scott. These two individual groups, silver and gold specifically, tend to do a little bit better as a gauge of the maybe the lack of confidence a little bit. There's been a lot of movement into these two segments of the market quite a bit this last year.
Yeah, well, you look where the confidence in the market started to break down, and there's a direct correlation with that time frame to when silver, gold, other precious metals begin to start going, not parabolic, but going up quite a bit from that point, right?
Hey, this is a great call out by Thea here about the classic example of a cup and handle breakout. Hard to disagree, Scott. I mean, this looks like a short term, the depth of the cup here, basically here to here, the height of the cup here, and then basically this acted as our handle right along the 20-day moving average. And when it broke the depth or broke the level of the cup, it's expanded. And so many a trader will just start to look at potentially the height of the cup to the bottom of the cup, add those two together, or look at the discrepancy there. It's about $8 an ounce by this calculation. And then they might apply that to the breakout level as a target, and that would give them about 61-ish. But, measured move targets are never guarantees. So just make sure you're doing your math and maybe building your trades and expectations around it. But great call out there, Thea, because that is on the money as I see it. Is that how you see it as well, Scott?
It is, Kevin, and I have another observation on this chart. If you'll look back beginning at about October between the last week and the last week of September, first week of October. You notice how small those candles are in
Yeah, right in here.
comparison to so everything to the left of that, compare the going all the way back even to the beginning of that chart. Look at the size of the candles
Oh yeah.
compared to the size of the candles from that day to now.
Yeah.
Look at that big green one, and then all of those. Look how big those are. What is that telling you? That's telling you that there's some big movement coming in and some anticipatory trading that's taking place. Anticipatory to what? And this is where the defensiveness comes in around these. If you looked at that, that would correlate with a lot of the fear that's been happening in the market.
I could be hard pressed to disagree with that. So we're going to keep a close eye on precious metals as we often do. Scott, we need to move into some stocks in the news this morning. I teed up the NVIDIA investment in Synopsys, so I thought we should look at those two real briefly. Sounds like NVIDIA is investing $2 billion in Synopsys. Now, NVIDIA has been in the midst of a pretty decent pullback from peak to trough here. If we looked at the peak we made on October 29 to the low that we just made late last week or early last week, this one's pulled back 20%. Many traders asking, is that sufficient? There is a zone of support down underneath us here. So let's just talk about NVIDIA briefly from a technical standpoint, what we may be watching or paying close attention to, Scott, and then we'll look at Synopsys here. But what are your thoughts as you see the NVIDIA chart?
First thing I look at on NVIDIA on this particular chart, this is not what I normally do, but my eyes are drawn first of all to RSI. Yeah, the relative strength, the relative strength's quite low on NVIDIA right now. We do see NVIDIA popping around some levels of resistance, or excuse me, not resistance. We do see NVIDIA bouncing off some levels or playing around with some levels of support right there. And again, this is going to be driven so much by the news and what's happening. The numbers on NVIDIA, in fact, they looks like they're going to be reporting. Did they report last week? It looks like they did, right?
Yep.
Just Friday. Or sometime last week, and they came in good. So we know it's a good company. We know it's a profitable company, but we know that there's a lot of strategery happening within the company. And as that continues, we could continue to see a little bit of volatility in this, but we'll just have to wait and see. This is a product of what's happening though in the AI realm.
Yes, it is. And I kind of drew that channel level above us around 185, a level above which traders are going to get a little bit more confident, perhaps. You know what, though? If you've been waiting for the recapture of the 50-day, nobody would fault you for that. As you can see, we're a good solid week beneath just the 50 here. And so if you're a trend trader, it's not a terrible approach for a trend trader to force the position to get back above the major moving average. And in this case, the 50-day would be a level above which some traders would feel a little bit more confident in the move with NVIDIA. Now, looking at the follow-up, with Synopsys, this is coming at a really important time for Synopsys, Scott. Take a look at the level that we're moving off of over the last couple of weeks here now.
Yeah, you're 100% right, and that's the level. The good news is for Synopsys, it's moving in the right direction. It looks like Synopsys is going to report earnings. Will that happen before evidently it will. So
that's 9 days out.
Next. Yeah. So evidently that will. We'll see how that works or what happens with that. So it'll be interesting to hear what they have to say around the merger, etc. But Synopsys is. I love that you just drew that in. It's obviously been in a short-term downtrend. So we've got to break that in order for it to mean anything, but moot point if we get swallowed up.
That's true, but I'll tell you what, there's probably not a whole lot better headline to wake up to on a Monday morning in a stock you own than to see that NVIDIA has decided to invest a couple $2 billion in the company, regardless of the level. That's a pretty significant positive for any company in reality, of course. Now, the question is whether are there legs here? Is there an opportunity beyond today's initial move? Moving off of the lows, 370 to 440, the stock has added a good 15% off the lows. But if you're new to the trade, can you afford to get started right now? Some traders would say, I want to wait a little bit. They want to stick with it and see if it can hold the 50-day on a close today. Some traders might get started today using the low of the day as an exit point. So if you traded back below today's low anytime over the subsequent days or weeks, they might just say this was a nothing burger as it relates to Synopsys, but that would at least give them some way to get started. So some consideration in here for that type of action, perhaps, Scott, but still a downtrend, good narrative, good story for the day, but a downtrend nonetheless, unfortunately.
Absolutely right.
All right, let's hit up some others now. I've got a couple of upgrades, one of which falls in a space that we always like to keep an eye on, that being energy. Chevron got upgraded at HSBC, and it's an interesting spot because, man, energy looks a lot like this too, Scott. It's not just Chevron, but if we look at the chart of energy's been really in consolidation mode, trying to figure things out. But the thing is, don't take this the wrong way. I don't want to see energy explode to the upside. One thing I'd like to do is keep oil under wraps because that's disinflationary for us. If we can keep oil in this short-term downtrend and not popping to the upside, then perhaps we can keep the inflation story at bay. But the energy space is right at a zone of potential resistance, and Chevron kind of moving it off of a short-term low here. So just some
while you're there, pull up OXY.
Yeah. Okay.
Another energy stock. Yeah, another energy stock. Similar behavior to what we saw with Chevron. But look what's happening there with bouncing off new levels of resistance. Interesting, right?
Yes. I mean, right into, boy, yeah, we haven't, and you know what I'm reminded about this, Scott, is that, isn't this the one that Berkshire was taking such a substantial investment in? And I was always told that anytime Buffett did anything with any company, it always turned to gold.
You're welcome. I helped you understand something new.
So this is a really interesting look at a chart. This action in here, a little bit concerning for holders, no?
Yeah, a little bit. I mean, look at how it's consolidated, and we're getting even deeper consolidation. You can even put a new level of support up a few points under those more recent lows as well. Yeah, I mean, so but it's getting squoze. We're getting. We'll see. We'll see what happens. With Chevron getting its upgrade, potentially others will could follow suit, and maybe investors and traders are watching for that. And if that's the case, then that could be helpful.
Could be. One other one that I wanted to throw out today, we had a downgrade at Bernstein on Zscaler. So Zscaler had been, and again, I get annoyed by this, Scott. I can't get away from it. I mean, hey, appreciate the downgrade at this point, but couldn't we have got it 20% ago? I mean, the stock has been
sure much has changed
for a bit. It waited until it broke down. Now we're 27% down from the peak, and now they downgrade it. So downgraded to market perform from outperform, new target at 264.
They're just hedging their predictions as well, Kevin. So that's probably what's happening. If I was one of those guys, I'd probably do the same thing because if you downgrade it and it bounces, then you look silly. But if you it's easier to downgrade it if it's below that level right there. So I look at that and I'm like, well, duh.
Yeah.
Exactly. Yeah.
Yeah, there were instances in the drop here that kind of conveyed a bit of a break. Certainly a move through the 50-day was kind of significant, and you can see there's been no bounce really aside of the day of earnings there after breaking the 50-day. So you just got lower highs along the way and now lower lows. So not ideal, but I will also mention as a reminder of news articles like this, when you have an upgrade or a downgrade, if we get opposite price action versus the expectation, that can be very notable. So if, for example, we get this downgrade today, and Zscaler shows that today's action is maybe the low of the pullback. Well, that would be notable if it starts to bounce following things like this. We like to see the stocks that we're watching do things opposite or give us some insight, maybe opposite of expectation, that can be really instructive as well. So I think it's always helpful, Scott, to talk about those things. Go ahead.
Yeah, can I throw in just one technical analysis kind of thing here? So you see Kevin's line there where he's got drawn in, old resistance, new support. That line's pretty definitive, right? It's a certain distance from top to bottom. But we got to remember that when we talk about levels of support and resistance, we're not talking about definitive points. We're talking about floors or trampolines that have a little bit of give in them. So, where that line is currently drawn, we could actually, thicken that thing up so that it would be in that area. And when we do that, I think it sometimes can make it just a little bit easier for us to visualize, technically speaking, Kevin, what's happening on these guys. So remember, that's not just a definitive fine line.
It's a great reminder that these levels should not be adhered to on a penny to penny, trade to trade basis,
Correct.
right? We need to give them some wiggle room. It'll absolutely benefit us as traders. All right. Unfortunately, everybody, we're at time and we got to wrap it all up, but I'll remind you of a couple of key things. Big fans to have your follow for us on X. Thank you, Brent, for putting those in. We've also got a survey opportunity in the chat if you'd like to complete that for us. We greatly value your feedback and input. Please feel free to do that as well. Much more to come from us here on this fine Monday, of course. You can keep it tuned right here to the channel, but we greatly appreciate you all attending and participating in the show. If you like the discussion, hit that thumbs up button for us down below. I'm going to update the notes for the segment, get this into the archive for all of our viewers who couldn't be here live, but really want to thank you all for joining, participating, and hope you all have a fantastic Monday. Big thanks to my friend Scott here. I appreciate you being here today, Scott. It was great to have you back.
Always good to be with you, Kevin. Thanks so much. And thanks everybody for being with us today.
Absolutely true. Thanks, everyone. Have a fantastic Monday. We'll catch up with you again real soon.